Welcome back to Your Average Investor, the channel that looks at my journey through investment, budgeting and finance. We're getting towards the end of the month now, and it's been a while since we last checked in on my Vanguard portfolio. So that's what we're going to take a look at today. We're going to see how that's developed over the last two and a half weeks since we last took a look at it, see where it's sat now, and look at the investments that I'm going to be making over the next few months. If you do enjoy videos like this, where you watch my portfolio develop over time, why don't you like and comment on the video and consider subscribing to the channel to catch all of my future updates on both my Vanguard portfolio and my trading 2-on-2 portfolio. So with that said, let's hop straight onto the Vanguard platform and see where my portfolio is at. Here we are then inside my Vanguard account. You'll be able to see that since the last update we did, my ISA value has decreased by around £50 and it's now worth £3,283.66. Also, my personal rate of return has decreased from 10.3% down to 6.57%. You'll notice that since my last video I haven't actually invested anything more, with me still having £18,940 left in my ISA allowance for the 2020-2021. However, in today's video I will be making an investment of £240 as part of my monthly pound cost averaging strategy. If we take a look at the performance of each of my individual ETFs over the last week, you'll be able to see that each of them decreased in value from the beginning of the week to the closing point on Friday. This is largely due to fear of a second peak of COVID-19 later in the year. While the country is beginning to open back up, with people going back to work and some shops and stuff opening up now, the markets are not showing the same level of confidence in the outlook and the future. There's also a lot going on in America at the moment which is driving the markets, and this will be affecting the global market as a whole. If we take a look at the month to date, you'll be able to see that although the total value of my portfolio has decreased by around £50, I'm still in a positive rate of return for the month, with my portfolio up around £62 this month. While I've only invested a further £30 this month, that will be changing in a few moments. Interestingly, the dividend payment date for all of the ETFs that I'm currently invested in was the 24th of June. However, you can see in my income returns for June, currently nothing has come into my account. When I initially filmed the video, we were 4 days past the dividend payment date and I was unsure as to why I hadn't received it yet. So I dropped them a quick secure message on the Vanguard platform to see what was going on, and they responded really quick to me. And this is something that I can really say about Vanguard: their support is excellent. What they said is that they usually pay on dividend pay date, but they often check that the dividends are correct before paying out to their investors, and therefore that's why it took a little bit longer this month. Now, Vanguard are actually allowed up to 10 days to release their dividend payment. So in the future, if you are a Vanguard investor and you're not seeing your dividends come in, allow up to 10 working days before you do speak to them. So with regard to my actual dividend income, I obviously invest in 4 ETFs at the moment, each of which are income ETFs. Now, this dividend payment is really interesting because it's the first time in a long time, potentially ever, that Vanguard's S&P 500 ETF has paid out a higher distribution than Vanguard's FTSE 100 ETF. This time, Vanguard's S&P 500 paid out 5.5p per share more than the FTSE 100 ETF. Now, the FTSE 100 ETF is well renowned for giving high levels of dividends, and maybe this could be something that changes in the future. Now, this is probably due to the fact that Shell and other places aren't paying their dividends this time round, so this will probably change back to normal in the future, with Vanguard's FTSE 100 paying a higher dividend than the S&P 500. But it'll be interesting to keep track of this over the next dividend pay dates. So in total then, from Vanguard's S&P 500, I received 15.5p per share, equating to £2.98 in dividends. For the Vanguard FTSE 100, I received around 10p per share, equating to £2.41 in dividends. From the Vanguard Emerging Market ETF, I received 21p per share, and this equates to £1.26 in dividends. And finally, Vanguard Asia Pacific ex Japan, I received around 6.8p per share, equating to 68p of income. So that sees me making a total dividend income this month of £7.33, and that puts me well on the way to meeting my target of £30 in dividends throughout this year. This is especially true when you take into account the fact that this quarter is particularly low dividends for each of the ETFs because of the global financial and stock market crisis that we've seen over the last 3 months. And also because I'll have dividends to come from my trading 2-on-2 portfolio also. If you want to keep track of all that with me, you're in the right place, and keep watching my videos in the future. And with that, let's get back to the video. If we take a look at my individual investments and compare them to that they were in the previous video, we'll notice that the value of my FTSE Emerging Market investment has actually increased by around £4 over the last 2 weeks. That's unfortunately where the increases end with regards to my portfolio. And looking at the FTSE Developed Asia Pacific ex Japan, we'll be able to see around a £3 loss since the last video, down to a total rate of return, or a total return of £24.94. As usual, the FTSE 100 has taken the hardest hit, probably because it's one of my larger investments. However, the total value has decreased by around £20 and it's back down to a rate of return of negative 14.5%. The value of my S&P 500 and Vanguard Life Strategy investments have both decreased again by around £20. If we take a look at that all together then, you'll be able to see that I've currently contributed £3,180 to my investment ISA, and currently that's valued at £3,283.66. This means my investments have returned to me £103.66, giving me a rate of return of 6.57%. I did say at the beginning of the video I'd be making an investment today, and that's true, so let's do that now. For those people who've never used the Vanguard platform before, investing is as simple as tapping Invest Now. And then we're giving two options when you can invest at the next trading point or a live ETF price. Personally, I would always recommend using the next trading point, as it limits any fees that you may be subject to. Unfortunately, Vanguard don't currently allow fractional trading in their ETFs. However, if this is something you're interested in, Trading 212 could be the best platform for you. Trading 212 currently offer fractional trading in each of the Vanguard ETFs. Because of this, I have to calculate the amount I want to invest into each product based on the current market value of the ETFs. As I said, today I'm going to invest in each of the 4 ETFs that I currently invest in. So we'll start off with the UK-based one, and that's the FTSE 100 ETF, or VUKE. I'm going to invest in one share of this ETF, so I'm going to put £28 here. This will be enough to cover the value of one share and take into account any market move when the market's open tomorrow morning. The second ETF I'm going to reinvest in is the FTSE Developed Asia ex Japan, and here I'm going to buy 2 shares of this product. So I've calculated that I need to invest £38 to purchase 2 shares, again allowing for any movement tomorrow morning. We'll then invest into the S&P 500 ETF. Again, I'm going to purchase 2 shares here, so I've calculated I need to invest £95. And finally, Vanguard's FTSE Emerging Markets. Again, I'm just going to buy 1 share here, so I need to put £45 into this investment. So this gives me a total amount invested in this instance of £206. However, I said at the beginning I was going to invest £240. So for the time being, I'm going to put the rest into a cash investment. So to make this investment, we simply tap Next, and then Vanguard gives you a rundown of the ongoing charge fee for each of the investments that you're making, and you can add a payment option. So I've now proceeded through the payment procedure, and you can see that I've now got 4 pending buy orders in each of the ETFs I've just discussed. These should complete sometime tomorrow morning after the market's opened. So if we take a look at the overall value of my portfolio then, now I've made that £240 investment, you'll be able to see that over the lifespan of this account, I've contributed £3,420 to my Vanguard account, and it's currently worth £3,523.66. The return on my investment has of course not changed, and it stays at £103.66. Equally, my rate of return stays at 6.57%, and this is because Vanguard calculates the rate of return of your investments with respect to time, and therefore adding money to your account does not reduce the overall rate of return. This is one of the most interesting tables that I've found on the Vanguard platform, and it shows you your performance over the last 3 months. Now, bearing in mind, we're probably just over 3 months now since the market took its big downturn following coronavirus. And while the markets haven't fully recovered yet, and there's still lots of uncertainty, there has been a big rally in the markets since the middle of March. This is demonstrated by my performance over the last 3 months. You'll be able to see that my investments have returned to me over £380 in that time, giving me a rate of return from the last 3 months of 16%. There we go then, a return of 6.57% since the inception of my Vanguard portfolio, around 13 months ago now. As I've said in previous videos, with everything that's happened over the last year, I'm really pleased to be in that positive rate of return at the moment, as it could have been a whole lot worse. While there's still lots of uncertainty within both the economy and the stock market, I'm a big believer that timing the market is better than timing the market, and therefore I will continue to pound cost average throughout the next few months, years and decades, no matter what happens with the market. There's lots of research out there showing that this is actually more effective and more efficient, giving you better rates of return than actually trying to time the market. Whilst you could make some big wins by timing the market correctly, you could also miss out on some big wins or make some big losses if you incorrectly predict the future. Added to that, I don't have the understanding to be able to predict what's going to happen with global economies and stock markets, and therefore pound cost averaging, for me and for most people out there, is the best strategy to adopt. We've come towards the end of June now, so in my next video we're going to take the opportunity to have a look at how much money I made match betting in the month of June. It's the most I've made in a month ever, so it'll be quite an interesting video to look at. I'm also going to set myself a match betting challenge for next month, just to see how much I could actually make if I give lots of time to it over the full month. So if you're interested in match betting, want to find out more about that, check out one of the videos up above, or come back for the next video, subscribe to the channel and check it out there. Apart from that, if you haven't signed up to Trading 212 before, please consider signing up with my referral link below. What you get from this is a free share valued up to £100 when you invest just £1. I also get a share, and over the last few weeks I've seen these coming in quite quickly, so thank you for those of you who have used it. And that's about all we've got time for. Like I said, come back to the next video to check out my match betting performance from the past month and to see what target I set myself for next month, and hopefully I'll catch you there.